Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's top stories with you. We're starting off with a big one. Advanced Micro Devices, or AMD, has just announced a $6 billion stock buyback plan, which represents about 3.3% of the company's current market value. This move has sent AMD's shares soaring, with a 6% jump in just one day. But what does this mean for investors, and why is it significant? To break it down, a stock buyback is when a company uses its own funds to purchase its outstanding shares from the market. This can help to reduce the number of shares available, potentially increasing the value of each remaining share. In AMD's case, this $6 billion buyback plan comes on top of an existing $4 billion plan, bringing the total to $10 billion in share repurchases. Now, some analysts are saying that this move is a sign of confidence from AMD's management team, as it suggests they believe their stock is undervalued. Others are pointing out that the timing of this announcement is interesting, given that AMD has ample funds left on its current buyback plan. And with the company's recent partnership with Saudi Arabia's Humane to develop advanced AI infrastructure, some are wondering if this buyback is a way for AMD to signal its commitment to shareholders while also pursuing new growth opportunities. It's also worth noting that AMD's rival, NVIDIA, has been making similar moves in the AI space. The competition between these two tech giants is heating up, and investors are taking notice. As we always say on the Riskwiser Zone, it's essential to consider multiple perspectives and do your own research before making any investment decisions. We'll be keeping a close eye on AM stock and the broader tech industry, and we'll bring you updates and analysis as more information becomes available. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through our show today, and we've got an exciting segment lined up for you. In our previous story, we explored the latest developments in the world of fintech. Now, let's dive into a fascinating partnership that's making waves in the digital asset space. BlocPal and Mobilum have announced a strategic partnership aimed at expanding global payment and digital asset capabilities. This collaboration brings together BlocPal's innovative approach to blending traditional financial channels with decentralized financial services, and Mobilum's sophisticated payment and compliance infrastructure. According to the press release, this partnership will enable BlocPal to deliver superior financial services globally, streamlining fiat and crypto transactions. The integration of Mobilum's payment and compliance solutions will also strengthen BlocPal's readiness for the upcoming launch of its tokenized assets and decentralized exchange, BlocPal's exchange. We spoke to industry experts who highlighted the potential benefits of this partnership. The synergy between BlocPal and Mobilum is undeniable, said one expert. By combining their strengths, they can provide secure, compliant, and efficient financial transactions across Europe and North America. However, some critics have raised concerns about the regulatory landscape and the potential risks associated with digital assets. As one analyst noted, while this partnership has the potential to drive innovation, it's essential to ensure that all parties involved are adhering to strict regulatory standards and prioritizing consumer protection. As we analyze this development, it's clear that the partnership between BlocPal and Mobilum represents a significant step forward in the evolution of digital assets. However, it's crucial to approach this space with caution and consider the potential risks and challenges. We'll continue to monitor this story and provide updates as more information becomes available. In the meantime, we'd love to hear your thoughts on this partnership and its implications for the future of finance. Share your comments with us on social media using the hashtag #RiskwiserZone. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's show, Let's take a look at some of the major market movements and news that caught our attention. We've seen a mixed close in the US markets after a choppy session, with some stocks ending on a high note while others took a hit. The conversation around bundling and unbundling media services has been heating up, with some companies exploring new ways to package their offerings and make them more appealing to consumers. The rebranding of HBO Max back to its original name has sparked an interesting debate about the importance of branding in the streaming industry. In other news, the U.S. economy continues to be a topic of discussion, with experts weighing in on trade deals, tariffs, and the potential impact on businesses and consumers alike. The rise of AI and its applications across various sectors is also something that's been making waves, with some companies investing heavily in this space and others exploring new ways to leverage its potential. As we navigate these complex and ever-changing markets, it's essential to stay informed and adapt to the shifting landscape. At the Riskwiser Zone, our goal is to provide you with timely insights and analysis to help you make more informed investment decisions. So, what does this mean for your portfolio? It's crucial to remain vigilant and consider multiple perspectives before making any moves. The markets can be unpredictable, and it's essential to prioritize risk management and diversification in your investment strategy. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.